What's going on, guys? One of the most frequently asked questions that Carmine and I receive is, what was that tipping point in our trading career? What got us to be profitable as traders? We discussed this question in some detail. We came across 4 main topics that really aligned with both of our trading journeys, and we're gonna go ahead and discuss those topics in today's video.
If you want to go from struggling to start seeing a difference in your trading, these points are crucial. And the first one we're going to talk about is journaling, and I think this is key. I don't see many people doing this. I see a lot of traders going into the market blind without collecting data. And I would say for me, journaling was a crucial role in the turning point, or what really got me to see the market from a different angle.
So early on in my trading career, journaling never even popped up in my head. I didn't even think about it. I didn't even start an Excel file. I did no type of data collection. I just walked into the market, traded. It was either a good day, a bad day, and I accepted what it was and I moved on. This type of trading was very amateur. I wasn't able to build upon it. I wasn't able to build a strategy based off data. And once I started to do this, I was able to start to build my strategy. A strategy in trading is crucial. And the only way that we can build a strategy is to understand what has worked, what has not. How are we going to figure out what has worked and what has not in the past? Unless you have some crazy memory, unless you can look back at every trade without jotting some kind of data down, understanding and documenting. And we have to be journaling as a trader. Every single day we make a trade, we have to journal our trade, understand what went right, what went wrong, how do we improve on that trade, how do we exploit the good things in a trade, something that we did well. We have to continue to do that. We have to trust that strategy. We have to continue to build upon those good and try to remove the bad out of our trading. And it's not possible to remember all of this without writing down your trades in some sense, however you guys want to do it out there, journaling, documenting the trades that you take, understanding and building off of those trades is definitely one of the biggest turning points in my career. And I think Carmine can agree to that as well.
Absolutely. It's almost like you were going to take a test back in elementary school. If you go into that test well prepared, you studied the study guide, you're going to have more confidence answering those questions because you studied it and you know that this has a high odd of being a correct answer. When we have our journal, this is essentially our study guide. And how good would it feel to go into the market with such data and know what works out for you the best, that when you see it behind the charts, you know it's going to be a high quality setup. And probably the most important part of a journal is to annotate your charts. Take a screenshot of the trades you took and the charts, what it looked like, so you can visually see it. Visuals are key. Circle where you entered, circle where you exited, write down your thoughts when you were in that position at that moment on that chart so you can visually look at it and see it from a different angle.
So over about the last half an hour, Carmine and I, in between making this video, we're talking about trades that we've taken in the past, and this was only possible because we've journaled our trades. Carmine was able to go back on the computer. We were able to talk through the strategy that he was using, why he entered a trade, teaching me something, being here, learning from Carmine. I was able to teach him something as well. This is the importance of journaling, going back, being able to look at what we did in the past. Did it work? Did we win? Did we lose? But overall, learning from our trades and learning from our experiences in the market. So the second point that we wanted to touch on today was trading psychology. And to me, this means being comfortable in the trades that you take. It's as simple as that. I have to be able to be comfortable every time I enter a trade, whether it's short, whether it's long, no matter what, I need to be comfortable in the trade. I can't second guess myself. I can't be fearful of what the end result may be. I have to be able to think the same way that I was thinking before I entered as I'm thinking while I'm in the position. If my mindset instantly changes, if my psychology instantly changes after entering a position, I know something is wrong. I either didn't get the entry I wanted, I have too much size in the position, something is making me uncomfortable, and that feeling of being uncomfortable is just going to cause our psychology to be way off in any trade that we take. Being comfortable with the risk that you have on, the trade that you're in, at all times, understanding your risk, your targets, that will all result in a good trading psychology. We have to be able to be comfortable in the trades that we take.
You have to be comfortable being uncomfortable. And I got a motto that you have to go through it to get through it. A lot of people feel these emotions, they take losses, they get discouraged, they get frustrated themselves. But honestly, you have to go through that to actually get through it. Another thing which really helped me, it was a period of over like a year and a half, 2 years, where I would consistently read trading psychology books. Brett Steinbarger, Mark Douglas, any trading psychology resource, my trading psychology videos, his trading psychology videos. They are very, very important because it's going to mold your mind to shift your mindset to focus on what's most important and to give you the route of what you have to go through to get through it.
So the third thing that we wanted to talk about was trading strategy. And probably over the first 5 years of my trading career, when everyone was talking about online, what's your trading strategy? What are you looking for? I'll be honest, I had no idea what they were talking about. I didn't know what a strategy was. I didn't know what I was looking for on a daily basis. I was all over the place. I felt like I would walk into the market, maybe look for something that had momentum. I'll try to buy calls here. I'll try to buy puts there. I realized this is not going to work. This is not something that I can repeat, that I can stay consistent with. I knew I had to niche down my strategy, niche down what I was looking for every single day I walked into the market. And this is when I realized that I needed to start to build an actual strategy and not deviate from it at any point while I'm trading intraday. For me, as you guys may know, if you watch my videos, I watch the break and retest strategy. I look for markets to break key levels. I don't trade the breakout. I will not chase the breakout. For me, this is a psychology thing. I will allow those traders to chase that breakout because I know those traders are weak-handed. I know that if the market pulls back, the traders that chase the breakout will most likely be weak-handed, will most likely sell their positions for a loss or a small profit if the markets pull back. And that is when I like to strike. I like to take advantage of those weak hands that exit their positions while the market is pulling back to that key level that broke out originally, and then I will look to long or short off that key level once it is retested and once that I see confirmation that that level is now standing as a new demand or a new supply zone. So when I enter a trade using my strategy, this is already touching on the 2 points that we've previously talked about. My psychology is right. I've seen it before. I'm comfortable in the trade. How do I know that? It's because I journaled my trades in the past. So those 2 points that we already talked about plays into the strategy, and this is how all these come together to become profitable, to make profitable and high risk to reward trades.
It's almost like a domino effect. So for me, is a couple key points. The first thing is getting rid of all indicators. My own viewpoint, you might agree with this, you might disagree with it, but that's what actually makes up the market, is indicators lag. So anything that lags price will skew your risk to reward. It will get you in after the move, and it doesn't have anything to do with true organic price action. The market is an auction, so for you to have success in knowing if the auction is going to go up or down, you have to be able to read that auction. Indicators don't give you any information about the auction. True organic price action is what gives you information about where the market could possibly head next. So the second point is focusing on true price and volume. Supply demand zones, key levels, support resistance, break and retest, reading the tape, time and sales, level 2. Those are all core foundation to my trading strategy. And once I focused on this and started to see some success, that's when I knew I had something that worked for me, and it was just scaling it up from there. Stop jumping from strategy to strategy. Trying out different things is totally fine. But a lot of people try things one day, they take one loss on it, and they go to the next strategy. It's not going to work out, and it's a constant cycle that you're repeating, and you're going to go in a loop with no clear direction forward. So the point of this is you really want to find one strategy. It could be a core foundation to branch off into other things. Me and him both have videos on both of our channels on exactly how we trade in depth. I definitely recommend going through some of our other videos because there's a lot of information in them.
So the fourth and final point that we wanted to touch on in this video is risk management. And all of these points we talked about previously, without risk management, it's all out of the window. I'm sure many of you out there have had those days where you lose all of the gains that you made all through the week. Monday through Thursday, you had a fantastic week. Friday comes in, you feel a little bit greedy, you're feeling good, you wake up on a Friday, you want to make some more money, and you lose everything that you originally made the entire week. So one of the major keys to profitability is to make sure that your losses are smaller than your wins. And if one loss wipes away 4 days of wins, something is clearly wrong there, and something has to change. This is something I talk about quite a bit. The definition of insanity is that you do the same thing over and over again and you expect different results. As traders, we have to really take it upon ourselves to understand what is wrong and to make a conscious effort to change things. How do we do that? We journal. We focus on the trades we take. We look at what went wrong and we make a conscious effort to change our risk management. Something that is not fun. It's not sexy. It's not something we want to do, but it's something that's instrumental to our success as traders.
Going back to the earlier points, there was a trade in my career where the market was ripping up higher and I kept shorting it as we kept going up. Number one, I didn't have a strategy. I didn't have a reason for entering. And number two, I didn't know what my risk was. I was essentially shorting it, adding to a losing position, and I didn't know where I was going to cut that loss until my full account got liquidated. There should be no such thing as a large loss in your trading journal. If you're taking trades where you lose $1,000, but your wins are $100, $200, like he said, you're clearly doing something wrong. You should never enter a trade where you're not getting at least 2-to-1 to your money, meaning you're risking $10. You need to be making at least on a minimal scale, at least for myself, $20 on that, which is a 2-to-1 or better risk to reward. If you could do that, win rates are irrelevant and you're positioning yourself to lose more. But when you are correct, those trades that you win on will take care of all those previous losses.
So at the end of the day, risk reward in your trades is most important. When I look back at my trading journal and I look at some profitable months, it's not always that I have a positive win rate. Sometimes I'll end the month with a negative win rate, but I'll be profitable on the month simply because the trades that I take have a positive risk to reward. So I hope you guys enjoyed this video with Carmine and I. We really enjoyed doing the collaboration here. I hope you enjoyed some of the other content that we provided. Make sure to let us know if you're enjoying this. Press that like button down below. Subscribe to the channel as always. If you want to check out some more trading content, I'll be sure to link Carmine's channel down below. Make sure to check him out. If you guys are coming from Carmine's channel, I want to say thank you for checking out the channel. If you enjoyed the content, make sure to subscribe here as well. Thank you guys once again. Have a fantastic rest of your day, and we'll see you guys in the next one. Peace.